This is a preview video. Thanks for joining us at xm.com. A very busy week lies ahead for pound traders with inflation data out of Wednesday, followed by GDP data for Q4 on Thursday. I'm Cristina Marujas. With me today is our senior investment analyst, Haralambos Pissouros. Haralambos, investors don't seem very convinced with the Bank of England's higher for longer stance and anticipate a rate cut in August. Now, could the CPI and GDP data out this week perhaps change the market pricing?
Hello, Christina. Yes, indeed, investors are convinced that Bank of England policymakers will start cutting interest rates in August. They even assign a more than 50% probability for the first 25 basis points reduction to happen in June. Now, with all that in mind, pound traders will pay extra attention to this week's data releases. Today, we already got the UK jobs report for December, with the unemployment rate falling and wages slowing notably, but by less than anticipated. Tomorrow, we have the CPIs for January. Both the headline and core rates are expected to have risen somewhat. However, according to the UK PMIs, prices charged by firms increased at the weakest pace since October, which in my view tilts the risks to the downside. So, a downside surprise may corroborate the market's view about a first rate cut in the summer, but the pace of subsequent reductions may also depend on growth-related data. So with that in mind, on Thursday, the preliminary GDP data for the fourth quarter may also attract special attention, and they are expected to show that the economy flatlined in the fourth quarter after a 0.1 contraction in the third quarter. So avoiding a recession may be cheered by the market, but may not be enough of a reason for investors to push back their rate cut bets.
And now let's turn to the market reaction, Haralambos. Let's look at the pound. How could the data this week affect sterling?
Now, the pound could come under selling pressure if the downside risks of the CPIs indeed materialize, but a flat GDP print on Thursday could halt the slide. However, a flat economy is unlikely to result in a long-lasting recovery in the British currency, especially against the US dollar, as market participants have been revising their Fed implied rate path to the upside lately. In my opinion, for the pound to enjoy decent gains following the GDP data, an upside surprise may be needed. A reacceleration of the UK economy may convince investors to pay attention to the Bank of England's higher for longer message, and they may eventually scale back their rate cut bets.
Haralambos, thanks so much. This was a preview video. Thanks for watching at xm.com.